We're
Awesome.
Home Insurance
Go for it.
Podcast.
What's our intro?
My name's Ryan Dunstan with East Main Street Insurance, and as always, the handsome Chris Kamara from Cobalt Insurance. And it's been a few weeks. We pushed off a day, changed the time. So not same bat time, not same bat channel, but we are here to answer questions for you, to provide you information, the latest, the greatest that is coming across our desks, and that we're wanting to get in front of you as quick as possible. How are you, Chris? How's the rain?
It rained for like 5 seconds as I got in the vehicle to take my son to school, and then as soon as I turned the corner, it stopped.
Yeah,
It's been off and on all day, but it's nothing crazy. The lightning, on the other hand, from yesterday, I've been seeing videos and pictures.
yeah,
Lightning was super impressive.
it was really nice. It was quite a show. I left work. It was like just close to 9 and saw the lightning show, and then driving home saw the lightning show pretty much all night long. I'd be interested to get the tally on the lightning marks.
My
No
kid
fires.
woke up in the middle of the night and said, "How come it's so bright?" So yeah, it was definitely a show.
No fires, which was great.
Right? Absolutely amazing.
Yep. Let me see if you have a question. Put it in the chat. We'll do that one. If you do have a home insurance question, whether it be fair plan, whether it be your policy, whether we're not your agent, whether you just want to ask us what's going on with your insurance rates going up, or maybe how to get your premiums down, feel free to drop it in the chat. We'll answer it now. We'll answer it later. We formed this podcast to try and help you get a hold of an agent and maybe find out some more information about what's going on with house insurance. No water claims for me, which was kind of cool. I don't know about you,
None,
but
not today.
Not today.
Well, I have one sort of, but it's not storm related. It's
the
client is remodeling their kitchen, took some tiles out, saw some water damage, traced it to their dishwasher, and now they need to get a contractor to come out and see what the extent of that is.
Oh, wow. Okay.
Yeah, not storm related at all.
That's good, though. At least you've got a good network of contractors and people to refer off to. I know that.
Yep, absolutely. So we've got a hodgepodge of newly breaking news today, so we'll just jump into it.
Okay.
I already checked. We're live on all our socials, and I think everything else is running the way it should. I don't really have a voice, but other than that, we're great.
Okay.
So moving along, this is something we're touching on. Today is not the same bat channel, same bat time. We would love some feedback on what works for more people, even if it's, maybe a Thursday evening, later in the evening instead of just at 3:30 today. Whatever works so that we can get out and help more people. That's really what we're looking for.
Yeah.
I'll let you take this. You gave me all the data. I just stuck it onto a slide.
Okay, sure. Been following, Fair Plan. We've been following, both you and I have been following Fair Plan for quite a while. We knew about this rate change that was going to be hitting the masses, and you put together that great tool of the proposed rate increases.
I'm pulling it up right now.
Yeah. If you go to Cobalt Insurance Agency, you can put in your zip code. You can see what the proposed rate increase is. We are going to look at revising this as well, but this was kind of something that we were aware about and wanted you to kind of start preparing for and getting ready for. So now is the time. The approval has been launched. It was approved actually on April 1st, so it's not an April Fool's joke. Fair Plan rates are going up. It is going to take some implementation time. I saw initially July, but now in reviewing all of the data of the proposed rate increase, we're looking at an October 15th date, if my memory serves me accurately, looking at the manual. So if your renewal comes up October 1st, you will not have a rate increase. If your renewable is November 1st, it should have that rate increase proposed on it. So definitely keep that in mind whenever you're getting ready to kind of, be prepared for all of the fair plan rate increases. Chris, you put in the computers, and it says there's basically a 36% average increase. And that's because it varies by zip code. And that's why Chris has that great zip code tool on his website. So some people zip code wise will have 10%, some people will have 40%, and it does vary by location. So be aware of your zip code, and if you wanted to get the exact percent increase, be aware of that.
Yeah. So I used 95949. Did you want me to plug another one as an example?
No, I mean, that's fine. What's something by you?
Let me see.
Okay.
Oops. Sorry, jumping all over the place here. Um, 95677. So this is Rockland, California. The initial proposed rate impact was 28, and it went down 28.4 down to 27.8. So being in Rockland, we only have 65 policies in the zip code. Enforced premium is, it doesn't look right, $161,000. I feel like that.
No, that's the on level. That's how much premium there is right now.
Oh, okay. Yeah. So
did you already update? Did you already update your website?
We already updated it, yeah, when you provided me the new docs. So this was updated.
It's got
March
a different
19th.
date in there.
Yeah, so this is data as of March 19th, and then the proposed rate impact was in February, and then you were looking at August, and then on April 1st, it got pushed to October, right?
Of 26, yep.
Yeah, so this was accurate as of March 19th, moving target, and now this date should now be October. And you've got to update the rate table.
Yeah. So but not much of a difference, which is nice.
It was like a 2% difference. Let me go back to 95949. So it went up from 19.9, so 1.2% increase. So the average rate impact would be an increase of $868. I think the percentage really doesn't show as much as the actual dollars. So your average policy in 95949 with the California Fair Plan will see an increase of about $870.
Wow. The one thing that I was really hoping for is that they would change that roof designation for, if you got a tile roof,
yeah,
a length of time of 25 years. That was not in that rate filing. I guess I'm a little unprepared. There was a lot more that I wanted to kind of go over and see where the differences are between what's going on now, like what's part of their underwriting guidelines and what is changing. I mean, the big thing is the roof. I had saw the water source as far as being within 1,000 feet of a water source. They
Instead
do have
hydrant, right? You're doing source, or they're doing source.
Well, they are still doing hydrant. So if you're within 5 miles of a fire station, and then less than 1,000 feet of a hydrant, you have a different rate opposed to if you're outside of 1,000 feet of a hydrant. So they do say hydrant, but there is this other class of business or classification that if you're over 5 miles but less than 7 miles of a water or a fire station, and then you're within a credible water source within 1,000 feet, it's like a 10W versus a 10. So I don't know what rate that is going to be. It's probably going to really apply to someone who's.
When you say 10, you mean protection class, PC 10.
Protection class, yeah. So, it's probably going to be on a question on the underwriting whenever you go to apply for the fair plan. It's probably going to have another excerpt. Obviously, way too soon for us to really see anything, but it is in part of their water or their guidelines asking about water source. So
cool.
It'll be interesting to see what that says. Yeah, it's just going to be shocked. That's why I see a lot more of the surplus lines carriers that are really going to be utilized a lot more heavily.
Yep, absolutely. I'm going to move to the next slide.
All right.
This is a big one, and you and I were talking a little bit about it earlier. We don't really like to talk about carriers per se, but State Farm has been in the news, and this is something definitely that was being discussed. Do you want to go over this slide?
Yeah, I think that they're trying to launch a new product, and they're going to be utilizing actual cash value as part of their payout for a claim, which is going to be huge. I know there was that Fannie Mae, Freddie Mac.
Yeah, we went over that in a prior podcast.
Thing that was launched. So I think that's allowing a lot more of these carriers to kind of use a different algorithm for paying out claims. And
what do you think about that from the consumer perspective? They're getting less coverage for a lower premium, but it may be affordable versus what the replacement cost would be, right?
So, I mean, yeah, I guess, I mean, at the end of the day, a lot of people always want more affordable, but at what cost? You know, you want to be able to replace your home at a less depreciated value. So it's definitely going to hurt the consumer. It transfers more of the risk over, which a lot of carriers are wanting to do, is not have, you know, basically take on the full paycheck or the full payout. So,
oops, sorry.
But I think a lot of carriers now, even the surplus lines ones, are doing that actual cash value
on a schedule.
On a schedule, yep.
Yeah.
But yeah, it's gonna definitely hurt the consumer at the end of the day.
What do you think? What do you think? And I know there's no specific answer to this, but I'm just curious. You've been in the industry longer than me. What do you think the premium difference will be between a replacement cost policy and an ACV policy? Is it significant enough to people?
I mean, right now, I don't see it being significant enough. I see it maybe $1,000, if that.
On a $8,000 policy, or I mean, $1,000.
Oh yeah, on a larger policy, something that's, you know, $2,000-$3,000 right now. You know, probably maybe like $300-$500, if that. I mean, okay. It's not going to be a large amount, but it's going to be something where the insured's going to consider, like, oh, you know, do I save $60 or a month, or, you know, whatever, a year, just so I can have actual cash value? Because a lot of people, I mean, it's just shifting more to the consumer to have them really take into consideration their policy. But, you know, before it was just like a set it and forget it, like, here's my $1,000, have a great day. And now it's like, you need to have that conversation with your agent and really kind of go through it with a fine-tooth comb of, you know, I don't care about maybe my belongings, or maybe they are really old because you've been in the house for 20 years. You don't need to have replacement costs, because some people don't at the moment even want to insure their belongings to begin with. So
yeah, or I mean, fully understanding, like having a detached garage and a beautiful detached garage, but to save on premium, if it burns down, you just wouldn't rebuild the garage. So you lessen the other structures coverage, save a few $100s. I see some people on both sides of that spectrum. Some people just want to make sure they're properly insured, and other people are just going to get the lowest premium they can and still ensure that they can rebuild their home.
Well, and I think this brings up a good point, is that it forces more of the conversation to happen. You know,
absolutely.
Before, it was just, yeah, what's the cost? And, you know, how can you get my cost down? It's like, okay, well, there are ways that we can get it down, and maybe actual cash value is going to be that. So,
right.
That's going to be good.
I
think for options.
Oh, this was the one. Sorry, I should have gone to this slide, but we've already sort of discussed this. There's a couple of pieces around this. So ACV, or actual cash value, is the depreciated. Help me state this right. Is the depreciated value of, how would you say that?
Recoverable depreciation.
Yeah. How do you explain that to someone that just doesn't know insurance? It's like a TV. Let's say you bought a $4,000 expensive TV and it's been 5 years. The value of that TV has gone down significantly. So, same thing for a house. If the materials in the home are old and worn and everything, the value has gone down for that house significantly, right? Versus replacement costs, which is what we're generally in the industry used to, is if your TV were to be stolen, you'd get replacement for a TV like brand new of equivalent size and shape and criteria, whatever. But it wouldn't be your $4,000. Oh, now you only get $800. You would get $4,000 in today's market to buy a similar TV. Am I saying that clearer?
No, yeah, you're saying that right. And I guess another great kind of way to look at it is there are a lot of people that are buying older homes. You've got a 1970s home, but then you go in and you update your kitchen, you spend 50 grand. So you've increased that, at least that portion of your home as far as a better replacement cost versus your entire structure that's still 1970s home. So that's where the actual cash value is going to come in. So because you're kind of piecemealing out what you're doing in your house and updating it, I think that's probably why the stance of actual cash value is coming into play, because there are so many homes. You can't go in now and rebuild everything. We're coming to that mark where there's things that are older and we can't give them replacement costs on their house because of how old their house is.
Yeah, my home's right on that cusp of it. It's 26 years old. So, I mean, I've got a tile roof, but even then I might get depreciated costs for that tile roof.
Right. But then you spend, like I said, the 50 grand on your kitchen or something else to update your house. That's going to then be paid out replacement costs, but you'd want to make sure you update that with your agent that, hey, I've spent this money to make sure that my
that goes back to having the conversation with your agent so that you get proper insurance for what you're looking for.
Definitely.
Okay, so I'm going to go off this slide and to the next one, which speaks almost specifically to some of that. So SB 876, which was definitely in the news today. I know that I and probably every other insurance agent in California got an email from the California Department of Insurance, and it goes over a number of things. This doesn't actually cover everything that was in it, but the proposal with double penalties for unfair claims practices, expand additional living expenses or ALE housing funds by 100%, and require upfront payments of replacement costs after a total loss. So not only has it gone further than what was the phrase? Something to list.
Oh, the ditch the list.
Ditch the list.
Yeah, it was an assembly bill that basically was paying you up to 300,000, and you didn't have to actually
go for personal property, right?
Personal property.
Yep. And as well, there's oppositions going on in regards to what that is. So that's the industry response. And then
that's huge too. I mean, most people are out 1 year, at least, 2 years. From even just a house
rebuild.
Fire.
Oh yeah.
Single house fire, that's 2 years. So yeah. And there's no way of knowing how much it's going to be.
Some good news that we're seeing is there are definitely more green shoots happening. I got an email today from one of our carriers that is now offering condo options, and condos have been very difficult to insure, mainly due to the age of the exterior of some of these condos. That the condo association, the HOA, Homeowners Association, is assessing fees to the individual unit owners to upkeep and maintain the exterior portions of these buildings and homes. And a lot of the carriers were starting to take some of that risk or not take some of that risk, and people had to come out of pocket. It looks like we're having more carrier participation in writing, condos. And then another carrier sent us an email today, and they're now increasing their appetite for landlord dwelling fire policies, so rental properties, and for vacant. So we're seeing movement in the right direction.
Yep.
And that goes back to yesterday's storm and the lightning. Super thankful that none of those lightnings lightning strikes had resulted in, wildfires.
Yeah, because I mean, just think about it. I mean, there wasn't rain for quite a while. Remember, it was almost like summer.
Mm-hmm.
Drying out. And I was kind of worried, to be honest, just with how dry things have been.
I'm gonna
But just because it's
Google.
raining doesn't mean rates are going to go up, because now they're going to be using that forward algorithm looking as far
Mhm.
as whether or not your area is prone to a fire. Which there's a few active fires right now, right?
SoCal. Yep.
Yep.
Near San Diego area and Inland Empire, if I remember correctly.
Mm-hmm.
Let's see what Google says about lightning strikes from last night's storm. Spectacular. It says roughly 3,000 cloud to ground lightning strikes were recorded.
Wow.
Yeah.
That's crazy.
Yeah. The National Weather Service noted these are embedded strong thunderstorms. So, and we've got a couple more days left of rain, if I remember correctly.
Yeah, I think it's supposed to last until Sunday, late Sunday.
Cool. Next slide. Ryan Lundquist, if you don't know him, he's an appraiser in the Sacramento area. He put out a newsletter today, and he's really good at just tying things together, not necessarily stating an opinion, but facts and perspective. And there's definitely geopolitical events, and that's increasing prices and uncertainty. He did mention that there are more sellers in the greater Sacramento area market than there were last year at this time. And something that ties particularly to insurance is inflation guard. So if you wrote a policy for a client, Ryan, 5 years ago, do you think their coverage would be sufficient on that policy for what it would cost to rebuild now?
Definitely not.
Yeah. So most people, like you said, were set it and forget it. And they're not looking to increase their premium by increasing their coverage, but they're also creating or helping create a gap in their coverages.
Yeah, and that's because inflation guard only goes up usually 2%.
Super minor, yeah.
So
Definitely doesn't account for the inflation we've had in the last few years.
no. No, and that's why you want to chat with a local agent, because they're going to know what the price to rebuild is. I mean, you don't want to use Zillow. That amount, one, is usually far off. Also, because it doesn't account for, I mean, it's taking into account like, land value and location and a lot of other factors that don't just go into reconstructing your home. So
yeah, absolutely. I think that's the last slide I have. Let's see.
Yeah, I don't think I had anybody ask a question. I didn't check even on the socials to see if anybody was.
I've been watching. I haven't seen anything.
Okay.
How do I go back to slideshow? There we go.
Anything else coming across your desk that you've seen?
A lot of people being non-renewed by Safeco.
Safeco, yep.
A lot of calls in regards to that Safeco and Liberty Mutual.
And that's why it's, they're being rebranded. So it's the same thing with Lemonade. Lemonade is the same thing. Whenever they switch carriers or rebrand, they have to find a way to get rid of the risk. So
they're just keeping the preferred risk and stripping out what is not definitely in their appetite.
Yeah.
A lot of that. Let's see. People reaching out for homes that are on greater acreage and trying to get off of things or shop. A lot of clients reaching out up the hill that have 7, 8, 9, 10 acres, and they're on the fair plan or they're on home site or something, and it's been going up $2,000 a year. I had a client call me. They went from 8 to 10 to 12 to 14 this year, and they're trying to shop around, and I'm looking at it going, I really don't think there's a better option for you. It is where the market is, unfortunately. I would love to have them as a client, but I just don't see where there's going to be any win, whether it be in coverage or premium for people in that situation. It's pretty difficult.
Which is unfortunate. I mean, and a lot of those people are like, oh, I'll just go without it. It's like you could almost spend that extra $15,000 to harden your home and make it so that way it's a little bit more.
Yeah, it's really hard in that PC or protection class 10 stuff. I mean, you don't have that hydrant, you don't have the fire station nearby. Even if you do have the fire station nearby, it's like a dead end road, or there's just a lot of factors.
Well, some of the carriers now are even requiring that you have that central station burglar and fire alarm.
Mm-hmm.
So if you do have a large property that are paying, over that $10,000 mark, look to some new carriers that are coming into the market that are non-admitted or surplus lines, but they are going to ask for the central station burglar and fire alarm. So I know that was one of them. And
how has the last few weeks been for you? Like, we haven't seen any slowdown in quote requests and clients reaching out to us and people looking for insurance. It's just not at all slowed down.
Yeah, it's been constant. I mean, I think it's just because there's these couple new carriers that have come out in writing, and it's just perking more interest because nobody wants to be on Fair Plan. Everyone's hearing that their neighbor is on this one policy and or two, these other carriers. So now they're reaching out to those independent agents because they have access to it. The captive companies, I'll name them because you should know what a captive is versus an independent. So a captive is like your farmer's agent, your AAA agent, your Allstate agent, your State Farm agent. They don't have access to outside carriers. An independent agent does. So that's why it's always good to go with an independent agent, because there are so many carriers that we can see on a daily basis that the captive companies don't have access to.
Well, you're speaking to high fire. I'll tell you, even here in the concrete jungle, we've got people shopping, and we've had carriers. We've got two right now that one was always competitive and a little picky, but they've opened up in places that are amazing, like El Dorado Hills. It's highly dependent on the property, but it's an admitted carrier. They have appetite. It's amazing. They're writing in El Dorado Hills and Lincoln, in West Roseville. And then we have another carrier that wasn't as competitive and is all of a sudden super competitive. We've written 7 policies with them in the last week and a half, and they're all very, very competitive. Like, we're writing good coverage A, good square foot coverage, and we're almost at $1,200 in premium for some of these things. So,
and are they package or
monoline and package? Yeah. So just home and home and auto.
That's great, because there are a lot of company or a lot of insureds that, now that they've made that jump from their admitted or from their captive company, they want to try and find another company that's going to help them with packaging their auto and home. So,
Yep. So there's definite
insurance. Things. They've got all the deals.
Yeah, definite positive things to shopping around now. The market is still in flux, and carriers are entering or slightly entering the market. It's always worth that look.
Yeah, it's going to be like this, I think, for probably another couple more years.
At least through the end of this year. I'm done with trying to have the crystal ball. I was so sure we'd be out of this market by now.
Yeah, I think in our agent group, our crystal ball was saying that this was the year of change, and I don't really see it happening. Now it's getting pushed back. I'll have to go through our chat and see what we said, but I know
I'm done guessing.
I do remember in 2020, like me and Aurora were like, yep, 5 years, 6 years. And here it is, 25, 26. Not much happening.
Yeah. Cool, man. Well, that's all the topics I had today, unless you wanted to go over something else.
Nope, and nothing in the chat. So let's end it. And hopefully, if you're watching this still, just make a comment like, hey, I'll be more participated, or I think you guys should move to this date and time. We want to take that into consideration and try and get more neighbors into what's going on.
Cool.